First of all, I think it's really interesting that when you look at the spot market, as you said earlier, Mario, that the spot gold market is down roughly 10%, but demand for the physical market, so physical gold, physical silver, that demand is through the roof. And so the premiums that you have to pay in order to get it, because that's a true supply demand market. There is a finite amount of silver in the world. There is a finite amount of physical gold in the world. And, you know, in the Wall Street, they can create as much as they want. The common market, the one that's more like this, just broke out. But the smart money markets, those that are paying like many millions of dollars for an ounce of gold, that's actually broken out very, very strongly. So what that tells me is that the smart money is absolutely moving in this direction. You know, even aside from central bankers who frankly know, you know, who knows more about the fiat money than central bankers. And they're accumulating physical gold hand over fist. Once it comes off the market, it's not coming on so easy, right? Because people, they accumulate it, they stack it, and they don't liquidate it. So this is the only asset that is truly outside of the system and runs zero counterparty risk. Any of those fiat money products, you know, including, you know, the bills, those are notes. Those are all debt instruments. They're all counterparty risk. Do you trust them? I think that's really the question that people need to ask themselves is, do you trust the central bankers to have your best interest at heart? Because we haven't seen that in any crisis at all. I mean, definitely they pick winners and losers. Do you trust the government? The currencies used to be pegged. The dollar was pegged to $35 for an ounce of gold. We reneged on that because we just inflated that proportion all out of whack. So the world was actually in the 60s, they were actually converting their dollars into gold and pulling gold out of the US system. Nixon had to renege on that agreement in 1971, disallowing governments from being able to convert their dollars into gold. And we had less gold in deep storage than we had prior to the confiscation back in 1933. Food and energy and the things that we buy day to day are much hotter than the print where they can juggle the numbers. So I would say that, you know, the strong dollar, I love when people say, but the dollar is strong. Really? Have you gone to the grocery store? Because it doesn't matter how many of those pieces of paper you have. It matters what you can convert it into. And people, normal, average, everyday people, they're hurting. And they've been working on the destruction of the middle class, which is really the backbone of employment and of this country, really since 2000. And I think that what happened in 2020 and since has been kind of the death knell. So no, the US is not doing great, regardless of what anybody blah, blah, blah says. People get all wrapped up in that nominal confusion where they think that numbers matter and they don't really matter. They don't really matter. It just hides the theft. When people look at Wall Street, which please, if you can tell me why anybody believes Wall Street, then I'd like the answer to that. But if people look at the Wall Street contract, the spot price of gold or silver, what governments and central bankers know is that a rising gold price is an indication of a failing currency. And so they suppress the price because there's an unlimited, really an unlimited amount of gold and silver contracts that can be created. And this is gold and silver that does not nor ever will exist. And before they changed how they accounted for it, at the Bank for International Settlements, which is a central banker's central bank, and they track the global derivative markets, For every 1 ounce of physical gold, there were 62,000 ounces of derivative gold. I don't know. I'm thinking that could really suppress the visible price. And even in the US, in the FDIC insured banks, they had to readjust how they accounted for their gold and silver contracts, and the level of derivatives on gold and silver, shot up, to the moon. It's at the end when all confidence is lost that you will see gold and subsequently silver, but definitely in all my studies, gold during these periods of time has ended up outperforming because it's the primary currency metal. And they revalue the fiat money that has no intrinsic value against gold money that's all intrinsic value. And it isn't intrinsic value because I say so. It's all intrinsic value because it's used in every single sector of the global economy. So it has the broadest base of demand. The treasury market is the foundation of the global financial system. And for, a number of years now, I've been watching the reduction in liquidity, the ability to buy and sell without moving price. We've been watching that deteriorate. And wow. So yeah, I think we're probably going to end up having to bail out if we're not already doing it in a backdoor way. Studying currency life cycles since '86, I started to see a repeatable pattern, and it happens every time. There have been a lot of government debt-based currencies that have collapsed over the years. And so I know without one doubt in my mind that we are at the end of this current experiment. And I don't like at all where they're taking us. And by them, I mean the central bankers, the IMF, the International Monetary Fund, the BIS, all those guys in power, the World Economic Forum, all those guys. I do not like where they're taking us. And I'm old. I just turned 68. But my children and my grandchildren and the great grandchildren that I don't even have anymore, that's for me, that's why I do this battle. Don't get blinded by those numbers and don't marry them, but that's what people do. They knew that people would marry the legal money of the state. And they also knew that not one man in a million understands inflation. And as it turns out, even the central bankers admit, we don't really understand inflation.
Oh, yeah.